Do you know that most traders do not know how to mark their correct zone in their point of interest correctly? One of the challenge we have trade failure. You realize that you make entry and price go against you, making you to be losing money consistently is because of how you mark your zone. The zone is very much important when it comes to trading because these zones are where you make your trading decision, which means that what will determine either your profitability or your loss is based on this zone. So the zones are very much important. Regardless of your type of trading, you always make an entry somewhere. Either you are using indicator, there is a place you are expecting price to come from in order come to for you to make entry. If you are using technical tools, there is that point you are waiting for price to come in order for you to make entry. If you are using a naked chart, whatever your trading pattern is, there is that particular zone that you are waiting for price to come to in order for you to make your trading decision. Many of us are marking the wrong zone, and that is why we will keep having the wrong result. In this video, I'll be showing you exactly how you can mark your zone when it comes to order block, how you can mark your zone when it comes to using technical tools like the trend line, the support and resistance. And I'm still going to show you as well how you will mark your zone when you are using your indicator. Now let's look at this is Euro USD, and as you can see, price is bearish. So let's look at a higher time frame and H4 time frame and see exactly what is happening. So on this H4 time frame, of course, price is as well bearish. This is what we can see because we see price coming all the way to take away this low. Initially, what do we have? Follow me carefully. This initially we have this higher low, we have higher high, we have higher low, we have higher high, we have higher low, we have higher high, we have higher low, and then we have this higher high. So on the long run, price break structure, and at this zone, this is the break of structure. Price break structure in that zone. So you can see that the previous movement closes below that particular point. Look at this. This candle closes below this. When we are considering break of structure, we are only considering the body of the candle and not the wick. So now that this price has break structure here, what do we want to see? We will now identify our point of interest. That is where the marking of the zone comes into play, right? So what zone are we going to mark here? We look at this H4 here, we don't have any form of order block in this movement. Sorry, we don't have a fair value gap. Somewhere here, we have something like a smart money cube. We have a smart money cube here, right? Now, this smart money cube coincides with the order block. Do you get it? So how do we mark this particular zone? How do we mark this order block? We'll now pick, if you want to mark, please pay attention to this. There are two ways you can do this. Now, if you click here, you can choose to click on this. So you can choose to click on this, right? This blue highlight. So when you click on it, it will give you the list of all of this. So you can either use this, the square, and if you are going to use the square, perhaps on your own chart, you haven't been using it before, so it will not appear. all you need to do is for you to click on this plus sign. All you need to do is for you to click on this plus sign. So when you click on this plus sign, I'm going to click on it now, add new. So you can see list of this. You are seeing vertical line, horizontal line. You keep going down, you will see shapes. Beautiful. So you can see here now we have shapes. Then you have this rectangle. So I already used it before. So you now tap on this rectangle. You see now. So you come to your chart anywhere you can draw it. So what you are seeing here is the rectangle that I picked. Okay, I'm saying this now for the benefit of beginners. So if you hold the rectangle down, if you press it, this edit icon will pop up. So what do? I will click on this edit icon. You see now, you bring me all of this perimeter of the rectangle. Then this box, this fill will be empty. So I'm going to tick on fill. So ensure you tick on this fill. Once you tick on it, it will take you to styles, which is the color. So when you will now choose any color of your choice. So I have to choose this fainted one, which is this particular one, so that even if I mark the zone, I will still be seeing the type of candlesticks. So once you have done that correctly, then you will come to your chart. So let me pick up my square. So this is my square now, and I want to go and mark my zone. So first, I want to mark my order block. But for my analysis, I realized that my smart money cube covers both my order blocks and everything. So I will pick up this. Now the question is, why am I using square? I am using square because the zone I want to mark, I am not treating it as a line. I am treating it as a zone. So you see that I'm going to mark all of this zone. Everything in that zone is what I want to mark now. Beautifully well. So you can see now, I've marked this zone. I am only meant to mark this particular order block alone initially. This is the order block I should have marked, because that is the last bullish candle before all of this bearish move that break this structure. Okay, but now I did not mark only this. Let me zoom out a bit so you can see what I'm saying. Now I was meant to mark only this order block, this particular candle, because that is the last bearish bullish candle before this move that break this structure. So I did not mark only that because I have this smart money cube, which is this candle you are seeing. This particular is a smart money cube, and the wick covers both all of this other block that I would have marked earlier. So because of that, I'm marking the whole of everything in that zone. So you can see the correct way of marking now. So why am I marking the wick and not only the body? Because this wick is a point of failure on the part of market participants, and the body represent point of reaction. All right, I'll explain that more when I want to mark support and resistance. So for now, let's proceed. So you see that markup, and then this is now the goal. Price move from here to this down point, right? And then we have a break of structure here. This is the break of structure. This structure was broken because we're having higher high, higher low, higher high, this way, right? And then price came down and give us a break of structure. So here we have a BOS. So what do we want to see? We mark our point of interest and we are expecting price to pull back. So price pull back into our point of interest. So you see how I mark this zone correctly, right? Now, this is how to mark your order block perfectly. You see how? Let's go to our lower time frame, 1 hour, and see what happened. Can you see that? So on this 1 hour, all of this movement you are seeing here, all of this movement is the movement that breaks structure. Look at the structural point that was broken. Do you see that? That is the movement that breaks the structure on the 4 hour. That is the point that was broken. Now look at what happened now. Then price pull back. So now the price pulled back. What do you see? Bearish engulfing candle. So, and that becomes what? That becomes our entry. So let me show you this. You can put your trend line like this, and then you wait for price to break out of it. You wait for price to break out of it to the downside, and then you sell all the way here. So you can see how beautifully that trade plays out. Now, staying on this time frame, I want to show us something. And what I want to show you now is how you can mark this zone using your trend line. So look at me and follow me carefully. Remember, when marking with trend line, we will need, now we are done with how to mark using our order block. So let me take this away. Now I want to mark this zone with a trend line. If you are to mark a trend line, remember, you will always need point A, you will need point A and then point B in order for you to connect your trend line. So now we have point A, this is our point A, and then this is our point B. So here is our trend line being connected. Now you see me connect this trend line perfectly well. Good. Now this trend line that I have connect, I want you to pay attention to something that I'm about to explain concerning this trend line. Very, very important. So now that I've connected this trend line, if you look at this trend line connection carefully, you realize that these candles project above the trend line. First, I will connect the trend line to the body to body of the point. So here we have the first point. Good. Here we have the body of the candle. Here we have the body of the candle. Are you getting it? The body to body. Then now look at this wick. Am I going to ignore this wick out of the trade, my trend line? The answer is no. Now you are wondering, why am I going to mark this wick? Because where this body stop is what we call point of reaction. And then where this wick is point of failure. So this show you failure on the part of buyers and reaction of sellers in the market. So you can see that here now, price break this trend line to the upside. So does that mean this trend line is no longer valid? It is. It is. So we are not going to treat this place as a line. That is why your zones fail. You are meant to treat all of this place as a zone. As a zone. So how am I supposed to mark my trend line? I will pick another trend line now and I will mark it this way. You see this other line up there? I'm going to connect my trend line to it. Do you see that? Now I will pick another trend line again. You see this touch on this downside? At this point again. So now what do you see? It looks as if I am having three lines all on this same asset. So what is my first line? You realize that this is my first line. This first one was the first point of what? First point of reaction. This upper one is showing point of failure. Now you see this third one that I put here. You see that there are times price will come close but it will not touch the middle line. It will reject from that point. So all of this now, if I want to trade based on my trend line, after this point A, point B, remember my trade is supposed to be in point C. So I will take this trade. And then after this one, I will take profit. Look at this one. This one went below the middle line. It went all the way to the upper one. You can see that. And I've already marked this zone from this point of of failure at that upper side, from this point of failure here. So why is point of failure important is because trade is human psychology. Buyers try to take price up here, then they fail. So another time, we know we are human, we always want to try what we have tried before and we fail in it. So, and then here is that attempt to push it up. So this is the right way to mark your trend line. Your trend line must be treated as a zone, not as a line. And you can see how we form the zone successfully. Okay, so that is for that. And what is the next thing? The next thing is support and resistance. So support and resistance is not a difficult thing. It is not difficult from this that we have just done. Okay, it is almost everything are all similar. So look at this. Let's say for instance, we want to mark a support zone. Yeah, most of the time, look at what we do. Support and resistance, we pick our horizontal line and then we mark it this way. We place our horizontal line and then look at this one too. We pick another one, we drop it, we place it here. We say, okay, we are marking support and resistance. Now we pick another line and then we place it here, right? Now this sounds good and it looks good. This is not bad. But however, support and resistance too must be treated as a zone. It is not a line. So instead of all of this, in this markup, now you see that this person mark here as a resistance zone, resistance for this price, right? And then mark here too as another resistance zone. So let me show you something where we are getting it wrong. Initially, this is the resistance, right? The resistance zone that this person marked. This is the resistance zone that was marked, right? So now it's expecting price to come from here and hit the resistance line. This horizontal line, you're expecting price now to come from here and hit this resistance line. But look at what happened. Price did not reach the resistance line and price reversed. So which means that you wait all the way for this movement, all of it, only for its price not to get to your resistance line. And then you keep wondering what is happening. Is it how you keep on waiting? The answer is no. The challenge is you are marking the wrong thing. You are marking the wrong thing. This is what you are supposed to mark. You are supposed to mark this point of failure, which is this week here. And then this point of reaction of this candle of the upper side, and also the same thing on the lower side. So to make it easier for you, if you are using line, you push the first line to the wick of that last candle, then you push this other one to the low, the high of that candle and the low of that candle. So you can see this. Let me mark it out. Okay, now this is it. You see that candle now? Oh my god. So now this is the candle we are referring to. This particular candle. We are referring to this bullish candle. So you see now you will mark the high because that is the last candle. And it have the highest high before all of this movement to the downside. So you mark the high of it and then you mark the low of it. So you have marked both the point of failure and point of resistance. You mark it with these two horizontal lines. So let's go back. Look at here now. When price return inside, what happened? Will you miss the entry? Never. Look at it. Price return into it and reject smartly. So this would have been what? Your sniper entry. So you see how exactly price behave inside of that zone. All by your perfect markup. Price retest it. I know this video is long, but we have to do it. Sniper entry. Perfect one. And then you see that move to the downside. This is how you can mark zone. And then you can as well use your rectangle to mark it, just as I've shown you earlier. So you can use the rectangle this way to do the markup. Okay, you can use the rectangle to do the markup. So you can see that perfect markup if you are not to match your support and resistance. Now we are done with that. So what is the last but not the least thing is moving average. So let's add the indicator, moving average. So in this scenario, for instance, I will just bring up my Bollinger Band. All right, the Bollinger Band is not showing, so let me bring up another indicator. I'm sorry, let me bring up my moving average. Let's see whether it will appear. Okay, so now this is my moving average, right? So for instance, if this is the moving average that you are using, this is the right way to go about it. This is the right way to go about it. Now if you are using this type of moving average and you are waiting for price to come to this moving average, if you look at this movement of price around the moving average carefully, for instance, if you are saying if price is above the moving average, you buy. If price is below it, you sell. Let me show you something now. You see that in this particular scenario, look at what price did. Price went up, price came, but price did not touch the moving average and price went back. Again, price came, did not touch the moving average, it went to give us another higher high. So which means that if you were waiting here, you will not make any trade until this point. So the question is, how do we go about this? You would treat a perimeter around this moving average in your mind as a zone. So you see the way I mark it? So all of this perimeter, you will treat it as this moving average zone. So even if price will break this moving average line to the downside around this perimeter and return and closes above this moving average, you will still buy because you know what is happening. That is it. Look at in this scenario, price came, work on it, price came, work on it. Look at this one and price break it. But when price came back and closes below it, you will still sell. So you will treat this as a zone. And I believe you have learned something new. Thank you for watching and for staying with me to this time. It is necessary and that is why the video has to be this lengthy. Thank you for watching. Please do not forget to like, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And if there's anything you want us to talk about, please indicate in the comment section and we'll do just that. Thank you and see you in the subsequent video.